So you want to buy some land and build your custom home. But what do you do first? Do you go find the land? Do you talk to a builder? Do you talk to the lender? Do you talk to the bank, credit union? What do you need to do first? Okay, what if you own a house now? Can you qualify with that payment too? This is what we're going to talk about all throughout this video here. So we're going to compare the difference between what we call the local bank versus our one-time close. These are going to be the two main types of construction loans that you're going to be looking at, okay? So first up, let's talk about the local bank, okay? How does it work, okay? And not all banks are created equal, first and foremost, to get that out of the way, because banks, credit union, and mortgage company are all going to offer you different programs. So you need to figure out and watch this video to the end to know which program is going to be best for you to qualify. Don't call the bank and try to ask for what the mortgage company can do like us, because those don't jive. Those don't go hand in hand, okay? So the bank, usually you're looking at anywhere from, I would say, 10% down to 25% down on your construction loan. But in order to get the construction loan, you got to get the land first. So typically it's going to be not one, not two, but 3 closings, okay? That means you got to close first on the land, put 20% down on your land, then you go back to that bank and you say, hey, I need my construction loan now. And they say, hey, no problem, let's get it appraised and you're going to need another 20% down. Maybe not the full 20% because you do have some equity from the land that you bought, but you're going to need extra money down to total 20% of your project, okay? So with that being said, you got your land loan, you closed on it, you got your construction loan, you closed on it, now your builder's building the house, and then after it's all said and done, you're going to go back and you're going to refinance with that bank or credit union or a mortgage, whatever, who you can do it wherever you want to at that point, but you're going to refinance it all together. This will be your third closing to put it all together, the land and the construction, all into your, what we consider at that point, your permanent mortgage, okay? That would be your 30-year mortgage or whatever you're doing, okay? So 1, 2, 3 closings. Typically, you're going to need 20% down in most cases, and you're also going to need a higher credit score. Normally, I would say, again, every bank's going to be different. I'm giving you rough numbers here, but I would say 680 and above is pretty typical what I would see, what a bank or credit union would want to see, okay? Now, let's look on the flip side of things, okay? Let's talk about a one-time close construction loan. That's what we specialize in. It allows you to put the land, the construction loan, and your permanent mortgage and close one time. We're not closing 1, 2, 3. We're closing one time in the very beginning up front. And it also allows for you to do it with minimum down, okay? So this comes in really handy when you are living in a current home and you need to sell that home, but you want to stay in the home while you're building, but you don't have enough cash at that time to do it, okay? So what we can do is put minimum down. You can sell your home later in the process or at the end and then apply that equity down, okay? We can break all this down to you, but that's kind of how it works. It comes in handy when you can put minimum down. So minimum down is conventional 5% down, FHA is 3.5% down, and VA is 0 down, okay? Very, very few lenders can do this specialized program. We have a certain designation with Fannie Mae, Freddie Mac, FHA, and with VA in order to do these loans, and we specialize in them, okay? We would love to help you. And we guide you through the whole process. We're not just going to take your application and say, okay, you qualify for this, good luck. Come back to us when you got it all put together. We help guide you through the process. We have thousands of builders all over the country on our approved list that we can guide you to help facilitate that. Help working with a land real estate agent, all those aspects to put together, okay? So the main difference, local bank, 1, 2, 3 closings, land, construction, and the permanent. On a one-time close, all at the same time. We only qualify one time initially. We order appraisal, we're underwriting, closing, all that stuff, okay, initially, then your builder builds out. But now, it does include 2 loans, but we only have 1 closing. So the first loan you get for the first year is your construction loan. Okay, you got a year to build the house, and we manage the builder through that process. At the end, we don't close or qualify again. We just modify it. We just roll that over into your permanent mortgage. So like I said earlier, if you sold your home at this time during the process of the build, this is where you had applied that equity down, and we're only rolling into your permanent mortgage what's owed on the line of credit. So if we gave you $500,000 on your line of credit and you sold your house, now you put $100,000 down, and you only owe $400,000 now on your construction loan, that's what your payment will be reassessed on, okay? So $400,000, and we also get the review rates again, by the way. I didn't mention that. But we do lock in your interest rate up front so it doesn't change. It never goes higher, but you do get the benefit of it floating down at the end of construction. So if the rates have came down between the time we locked you and the time of the end of construction, we float the rate down, we readjust the payment based on the end result on the line of credit, and that rolls right into your permanent mortgage. All you do is sign the modification paperwork and you start making your payments after that. And we can even finance in what's called an interest reserve, so you don't have to make those payments during the build. So if you do live in your current home, you don't want to have to make that payment and your interest only payment at the same time, guess what? We can roll in that account, interest reserve account, so it's making it for you so you don't have to worry about two payments at the same time. We're the only lender that can do that, by the way. So again, hopefully that sheds some light. Local bank versus a one-time close, which loan options you need to go with, or who you need to call first. You know, you definitely need to start with the lender or the bank side of things, because you don't want to be shopping for land or a bill that's going to be too expensive and out of your budget for what loan you're qualifying for. So please make sure to reach out and schedule a call meeting so we can jump into those details, and follow along for more construction loan tips just like this.